Well, thanks for joining us again for another crop insurance update meeting. I'm Corey. I'm with KW Insurance in Sunburst, Montana, and I am going to take you through the changes for the 2025 crop year, some payments that are coming hopefully your way here to kind of help buffer this tough year, and we'll just get right into it. So for 2018 through 2024, this shows you the loss ratio through our agency. A lot of our business is concentrated, as you can see where my pointer's at, up along the high line here. Years of drought. We're stacked into probably 8 years of drought in a row here. So we've really tested out the different crop insurance programs for sure. So $21 million in farmer paid premium through our agency, $102 million of losses paid out. That obviously has really buffered some of these bad years. I just wanted to point out how important this program is to helping us through these tough years here on the crop insurance side of things. If you're one of our customers, we will be calling you to go through this checklist. If you were at our meeting, you went through this already. But basically, some important stuff on here. If anything changes with your entity, we need to know that, because if we find out we missed a shareholder on your stuff, basically the whole policy is void if that gets caught at claims time. This checklist will walk you through all of the things that we need to do to make sure we don't miss something, basically. So the 2024 year in review. Another year of drought on the high line. We're at 13 million in losses through our agency this year, 12.5 million at this same point last year when we did this presentation. So even though we started out a lot better with a lot of rainfall at the beginning of May, it cut off and it got really hot, right? And that resulted in quite a few losses paid out again in this area. So likely more to come from SCO and ECO in May as far as money for you guys for the 24 crop year. And there's malt claims that are still getting finished up too, which will get paid out too. So positive changes for 25. So a lot of things actually changed for the better for once in the crop insurance end of things. The ECO subsidy for the shallow loss county program went from 44% to 65%. That effectively cuts your premium almost in half from what you were paying for ECO before, because the government's paying more of your premium. So that was a real positive change. They're changing to new braking rules where we don't have to do a written agreement to insure new braking. We just need to make sure it's in the correct soil type. So if you're going to do any new braking, we still want to know about it so we can make sure that land falls in the correct soil types. All of the new braking things we did in the past, there was only one or two that I can ever think of that didn't fall into the correct soil type stuff as far as productivity levels. So I don't think you're going to have a lot of issue there, but if you're breaking up some really marginal land, it may not be insurable the first year. The good news, though, with this rule change is we get 85% of the county average if it is insurable under a new braking written agreement now, instead of either 65 or 80. And there's no acreage limitation on what we can do or timeframes that we have to hit to get that written agreement in. So that was a real positive change. You now get 2 instead of 3 years to break out CRP once it comes out of the program to get 100% of county average. Another positive change there, of course, so they give you more time to get that done. And then native sod is now insurable the first year that it's seeded. That kind of trends with the new braking stuff, right? The same rules, though, other than that for native sod, where for the first 4 years that you grow a crop on native sod breaking, you're only going to get 65% of the county average instead of 100%. And they're going to take away 50 points of your premium subsidy as well. So revenue protection and enterprise units are now available on flax. That's something that needs to be changed by this deadline. It will default to going to yield protection. So all of you that are our customers, you'll have applications with RP now added on flax. And if you're okay with that'll be part of what you're signing for changes in those apps. And then enterprise units is added to most specialty crops. This is another change that needs to be made by March 15th. So that would include like mustard and flax, camelina, I believe. Those crops all now you can add enterprise units onto, but that's a change that needs to be made as well through your agent. So changes for 25, enterprise units is available on flax and mustard, and most other crops. Revenue protection is available on flax, and prices are down substantially, of course. As we get into this, you're going to see there's some hope on the horizon, I think, because anytime a commodity hits a bottom, it always ends up coming back up. So snowpack issues and prevent planting. So we've had quite a few pivots that were prevent planted the last couple of years because the snowpack has been so horrible in these irrigation districts. It's possible now that the RMA will consider the previous year's allotment to be your new normal. It sounds like as long as your irrigation district words their letter correctly, we may be able to use it like an average of the last 5 years for your new normal. So the takeaway from this is If you're thinking you're going to have water issues, make sure you get in contact with your agent and then have them communicate with the AIP or like an NAU or whatever to make sure that that letter is worded correctly for this prevent plant claims. So obviously, as we go forward, if we keep having water shortages, it's going to get harder and harder to do PP on irrigated. So if you're in this situation, just give us a call. On organic, the buffer zones are now required on all the maps. I think they may have always been required, but it wasn't really enforced, and now that's one thing they're really cracking down on. So if you're an organic producer that borders conventional farming, make sure that you draw buffer zones in the maps where that conventional land runs up against your organic. That's a required thing for these claims. They're also really tracking down on organic certified acres as far as getting that acreage report back from the certifying agency that's down to the farm, tract, and field level. There was times in the past, it sounds like, where these reports would just come back and say you're seeding lentils and peas on here, but it wouldn't be right down to the field level as far as how many acres. And this is something now that they're really cracking down on for claims. So if your organic certifying agency is not doing that, make sure that that gets done going forward. It might be possible if we get to a claim situation where it'll be too late to fix that if we don't have it correct. This was a change in 22 that we always review here, but if you fail to report all persons with substantial beneficial interest in your policy, all the crops in the application for all applicable crop years will be void. So if we get to claims time and somehow it's figured out that you forgot to report someone that has a 10% share in your corporation as part of that policy, they will void that policy, and that would be horrible, right? So we really need to make sure that every shareholder is listed underneath these entities if they have more than a 10% share. Now, this is just a chart that shows the inflation adjusted price for wheat. Pretty difficult times we're in right now. We're actually, my head's in the way here, it looks like, but we are at historic lows as far as that goes on the wheat end. And that's why I think it's just hard to cash flow. This shows you there's a tale of two farm economies, right? So you'll hear that the net farm income is down 25%, and that's the most it's dropped in 15 years. Well, it would be way worse if they weren't throwing cattle and calves into there. So as you can see in this chart, cattle and calves are up 183%. The rest of the grain commodities basically are down. Corn and soybeans to the lowest level in the last 45 years, year over year. So pretty tough time on the grain side, real good time on the cattle side, right? And then next year they're predicting a $40 billion increase in the net farm income, but that prediction is based off of government disaster payments. So with all the political turmoil going on right now, if they cut those disaster payments out, we'll be back in the same situation we were the year before. So it's really important to lobby your congressman if you feel like you're going to need disaster money to make this thing work. We need to put some pressure on people to keep that coming, basically. Conventional prices for 25, you can see winter wheat at $6, spring wheat at $6.54, and then durum always gets a premium to spring wheat, and the premium has increased here a little bit this year over last. So durum's at $7.72 a bushel versus $6.54 for spring wheat. That makes durum a really attractive option. Oftentimes it has higher yields too, both on recrop and summer fallow. The not so attractive thing about durum is the trying to market in the end. So some guys have done this for the insurance, and then in the end they figure out, well, geez, I can't find anywhere to sell this stuff. So we just need to be cognizant of having a market as part of our decision making on that. Canola's at 21 cents, about $10 a bushel, similar to what it was last year. And then oats actually are one of the things that went up the most. So they're at $3.49 a bushel, where last year I think they were at $2.80. So some increases on some of those other crops, maybe some opportunity at least to find some cash flow there. Barley at $4.47, and then that's the feed barley price. We can then use the malt contract to increase that price as well, right? On the organic side, you get a premium in prices. So for winter wheat, your base price is $11.98. Durum would be $15.40, and spring wheat is $13.05. So substantially higher prices there. But as you'll notice here, canola is at 21 cents, and that canola gets the same base price on organic as conventional if you don't get a contract for that. So if you're going to grow organic canola, if you want a premium price, we need to make sure you have a contract. There's no increased base price on that crop. $9.55 for barley as well on organic. Pulse crop base prices, these are the best guesses that I had, at least at the time I did this presentation. So 14 cents on the green and yellow peas, 28 cents on the small kaboolies, 30 on the larges. This is what your quotes were based off of. your quotes were also done off of 35-cent lentils. Now that market has rolled back enough that I don't think that's realistic anymore. So probably more like 30-cent lentils would be a better guess on where that base price will come in. So for you guys looking at your lentil quotes, if you take your guarantees down to about 90% of what's on your quote, that'd probably be a little more accurate. But we won't know those prices till March 5th, so we can always be surprised in a good or a bad way there, right? When you guys fill out your maps and then you give them to us, your FSA maps, and give them to us, we generate what's called a schedule of insurance for you, and that's what you're looking at on this page. We are going to now, when we have you e-sign stuff, initial this front page saying, hey, I looked at this and this looks correct as far as how these fields are colored in for my crops. And then on the second page in there, we have the acres totaled out by crop. And so we're going to have you initial that spot too, saying that you recognize it. Yep, I double checked this and this looks correct. The reason we are having you stop and initial those spots on the e-sign part especially is oftentimes with e-sign, it's easy just to skip ahead to the signature part and not review the document. This will make you just stop and review this stuff and maybe help us catch mistakes before claims time. So if you see initialing spots on the electronic sign stuff that we send you and it stops on these pages, that is just why. I just wanted to let you know. Most of you guys aren't going to delve into what's inside this, but every field and its guarantees are listed page by page, section by section inside your schedule if you want to get that deep into it. Then on the back page, most importantly for you guys, if you want to go back and look at last year's schedule, you can find like your barley, SCO, and ECO liabilities. So you'd go into this premium liability column. That's going to show you how much if SCO and ECO pay completely out. If you add those two together, that's what you would get for your payment, right? If for some reason the price, which hopefully happens in the future, if the price goes up, we can always have more premium liability than what's listed on the schedule at claims time, but there will never be less. So in a scenario where it went down like this, that number is what it is. So if you guys want to figure out roughly what your potential payouts are for ECO and SCO, that's where you would find that. That's on the back page of your schedule of insurance that you would have got from us from the last crop year, right? Beginning farmer rancher. Big thing on this is you must not have had an insurable interest in a farm or ranch for more than 5 years to qualify for this. So if you put your kids on your entity, so if you make them just shareholders of your corporation, the corporation has spent its 5 years already usually, so they won't qualify for these benefits even though they're new coming back to the farm. So what we really try to encourage people to do is if you have somebody new coming back into the operation, set them up on their own little LLC or something, so that they operate on their own and can qualify for these benefits for that 5-year time period. Part of the focus of the Farm Bill was to increase this to 10 years, which would be a pretty big deal because we have some producers that are in that 5,000 acre crop range that are new farmers here, and this is making like a $50,000 to $60,000 a year difference in the amount of premium they have to pay on that entity. So it's well worth the effort to make this work. You need to fill out that BFR app before the sales closing deadline to qualify. For the spring crops, that would be March 15th. For the wheat, that would have been last fall. So if you're a brand new guy, though, when we're adding wheat on, we can attach it to the wheat this spring as well. But either way, make sure you just do some research on this. And if you think you might qualify, fill out an app because it'll either bounce back that you qualify or not after they do some, they'll roll through some questions with you and then do some research in the government system for you. BFR benefits, you get an additional 10 points of premium subsidy. So in enterprise units, they're already paying 80% of your premium. That means they now would pay, the government would pay 90% of your crop insurance premium if you're a beginning farmer, which would cut your premium in half. So pretty big deal. Easier to transfer yields from the previous producer. That's a big deal too if you're taking over land somewhere that some older farmer is working with you on and he had good yields. Being able to obtain those yields is a really big deal, and so this makes that easier to do that. And then you get 80% of the county average instead of 60% for yield substitutions in poor years. So all real big things in the beginning farmer rancher. Native sod, we go over this every year, but basically don't do it without talking to the FSA first. That's the most important thing. And then if you do break out native sod, you get 65% of the county average for the first 4 years of cropping through us. And then after that, it rolls into regular crop production. And like we talked about at the beginning, you also lose 50 points to your premium subsidies. So it's doable. Just make sure, first off, you plan it out through the FSA. And then if you do that, just understand you're not going to have very good coverage for the first 4 years on the crop insurance. And there's just really no way around that anymore. And new for 25, it's insurable the first year without a written agreement. In the past, because that was new braking, we had to do a written agreement to get it insured, and now that's not the case anymore, as long as it falls into the correct soil types. CRP braking now has changed, like we talked about previously, to 3 years instead of 2. So from the time that comes out of the program, so let's say it came out this October. If it came out this last October, that would be the 2025 crop year. Like if you seeded winter wheat in October, that would be for the 25 crop year. So you'd have the 25, 26, and 27 crop years now to get that stuff tore out and put into production to get 100% of the county average. Added land, basically if you get over 2,000 acres of land in any given crop year, if you either bought it or it's a cash lease, then we're forced to use the county averages once you exceed that 2,000 acres benchmark for the new land. Where if you're under 2,000 acres in that scenario, we could go back and average all your other units of the same crop in the same map area basically to use for your yield if it's better than the county average. So it's just if you get over too many acres, we're just stuck using county average the first year on that stuff. 2024 SCO payments. So the yield for SCO for the 24 crop year will be released in May. That was getting paid out in April before. Now they had bumped it ahead to May for this last crop year. So it got bumped a little bit ahead, which is a bummer, but it is what it is. It's likely to pay along the high line on most crops. I'll go through why that is here in the next slide up, I think. Prices dropped on wheat and barley 15 to 20%. So anytime you have a drop in the market, that's why it's so important to be in revenue protection if you're in SCO and ECO to make these programs function correctly. Because anytime the market drops, you can cut a lot more bushels for the county and still trigger these. So how about PLC payments? So wheat has fallen to the level that we are just about to trigger. So last I looked here, so this was the beginning of February. So we'd have March, April, and May still to figure into this average. So 3 more months into the average. We're at $5.55 a bushel for the national average price for wheat in the U.S. right now. We need to get below $5.50 for PLC to start to trigger. I suspect that will probably happen as it keeps rolling backwards. We started with a higher number, and as we're averaging these sales in here, it just keeps rolling back. So we may get a 10 to 20 cent per bushel payment on PLC, which hasn't happened probably since 2018 or so, I think 17 maybe, somewhere in there. So you're going to see why having PLC and SCO stacked and then ECO stacked on top of that can make a big difference in this scenario. That payment wouldn't come until next October for the 24 crop year, but at least there's potential for that to happen. Disaster payments in 24, so they did pass an economic loss assistance program. This was before the current administration took office, but let's hope that's still coming. I think it's passed, it's in law, so we would assume that we are still eligible for this. But there's $10 billion passed there. It must be paid by the end of March per the bill, or that's how it was initially worded, was that they had 90 days to distribute this money. Our FSA person has a different interpretation of that now. Now they say in their rules it says every 90 days they have to report how much money has been dispersed. So there may be a discrepancy a little bit on when this would be paid out, but it's a pretty simple program. I would hope it could be administered pretty quickly. There was another thing passed in that funding resolution too, when that passed, and that was $21 billion for disaster programs for 23 and 24. So this would be for you guys that were in like a D3 or D4 drought, which would be most of our area, especially in 23. There may be another ERP type program that comes out in conjunction with this, would be my guess anyways, and how this will be administered, and that should be this crop year too, as the money was passed for it. So that $10 billion program, this is what they have for benchmark payments on that. Wheat at $31, barley at $21, and then lentils like at 19. So if you're a diverse cropping like guy that has wheat and barley and lentils, what we've been telling guys is to expect somewhere around that $20 to $25 an acre on average out of this program. It is possible that this stuff could get ratcheted back as they're chopping budgets everywhere at the moment right now. But going through in the form that it was passed, this should be roughly what you guys could expect. So on last year's seeded acres, let's just say roughly $20 to $25 an acre on average payments for you guys. If you're just a wheat guy, in theory, it'd be $31, right? So big deal. That would be a big deal cash flow wise. Where are we at right now as far as drought? We're actually just in abnormally dry instead of in severe drought, which is a change from last year. So that is a positive, but we are still in a dry situation here. We had snowfall, but not a lot of snowfall. So we're always worried about drought here in northern Montana, right? We added safflower to our rotation sheet. If any of you guys are going to grow safflower, basically you just couldn't have done sunflowers, mustard, canola, or lentils before it. So if you're going to grow safflower, give us a call. We can talk to you about the rotation issues with that crop too. But really, it's pretty flexible. If you do it following any kind of grass crop, you're going to be okay. The rest of the rotation sheet didn't change as far as the peas and the lentils and the chickpeas. If you're interested in this is on our website, kwsunburst.com. If you go to education in there, this should be on there that you could download. Safflower insurance was added in 24 to these counties. So if you want to do safflower in 2 or Glacier County, we need to get written agreements, and that's by March 15th for that crop. So if you're going to think about doing that, give your agent a call right away, because you need to start on that here probably this week to get that done by the deadline. Liberty, Hill, Blaine, Phillips, Choteau, Teton, Pend Oreille, Cascade, all those ones that are around us, as you can see on this map, those all now have safflower listed as a crop, so we can insure that without a written agreement. In Liberty County, this is just one example. They start you with a 726 pound yield. That would make your guarantee at 70% around $135 an acre, I believe, there for about $20 an acre of premium. So if we do enterprise units, it's $5 an acre. Oh, I'm sorry, $11 an acre in premium, and enterprise units $20 an optional. So there's another example of why enterprise units help so much with these specialty crops. We know you're not going to do the whole farm to something like this, but if we can do 20 more acres in 2 different sections, we can qualify for that enterprise unit discount and knock our premium back $9 an acre there, right? April 1st, the earliest seeding date for safflower. May 20th is the late planting period. October 31st is the end of the insurance period, just like all the other crops. Right now, there's a 25-cent conventional base price for that and 31 cents for organic. And then we could use a contract price on the organic to increase it up to 63 cents a pound if you could get a contract for that. Earliest seeding date. So this would be the earliest we could seed a crop and still qualify for a replant payment. So March 25th is still the earliest that we can start here for peas and lentils. That would be our earliest crop. Flax is April 11th, so that's a little bit later. Canola and mustard not till April 15th. And then wheat and barley, which is the bulk of you guys, April 6th is your start date for when you can start seeding and still qualify for a replant payment. Now, if you start before April 6th and the crop comes up and it gets established fine, then it carries through to the end and it's insured. It doesn't affect your insurance that way. It only affects if it comes up and it crusts in or freezes out or something happens that requires a replant payment at that point. The late seeding dates, none of this changed, but what did change was canola got bumped up to May 25th. So everything else stayed the same, but they extended your canola date from May 15th, I believe it used to be, up to May 25th before the late plant period starts. So widened the window on canola, which is a positive thing. Enterprise versus optional units. So this is the one thing that if you don't understand this or you don't do this correctly, this can cost you more money in premium than about anything else we would do on the crop insurance end of things. So to qualify, you have to have 2 or more sections of the same crop or type seeded to 20 or more acres in each section. So we can't just seed this stuff in one section and qualify for this discount. We have to find another section somewhere to put 20 more acres in at least, right, for this program. Some crops don't have enterprise units. We're basically down to just triticale on that, I think. So real positive change the last 2 or 3 years where they added enterprise units into everything else. So here's one example. We have 120 acres in section 1 that we seeded. We go out and seed 15 acres in section 2. Do we qualify for an enterprise unit? We do not. That is because we only have 15 acres in the second section, right? The next example, we have 100 acres in section 1 and 30 acres in section 2. Does that qualify? Of course it does, because we have more than 20 acres in both of these. You can also do enterprise units by county. So if you're a guy that farms where there's multiple counties involved, we could elect enterprise unit by county. And if you had just one section, like in this example down here in Pend Oreille County, we can have it put together with the 2 sections in Tooele County, and that would give you the enterprise unit discount for the Pend Oreille stuff. The problem with doing this is we can't do enterprise units by county and enterprise units by type at the same time. So once we elect the county thing, it's going to throw your winter wheat and your spring wheat and your durum back together, where if we do the enterprise units by type, it will keep each type separate for you. So enterprise units by type, that's an incredibly positive change that was made probably 4 or 5 years ago now, where they allowed us to take winter wheat, spring wheat, and durum and put them all into separate enterprise units by type. Before they made that change, all the wheats were thrown together into one unit. So in order to do that correctly, which we'll go through in the next slide, we need to make sure each type then is in 20 or more acres in 2 different sections. The same thing then was established for peas, chickpeas, and lentils. The one crop that hasn't got established for yet is feed versus malt barley, and I have no idea why that is. It will be great when that happens because there are quite a few guys that grow feed varieties and malt variety, and those 2 claims even are very separate in how they're worked. So right now, feed barley and malt barley will be all thrown into one pot before the claim is finalized. Peas, chickpeas, and lentils you can separate by type, and so can winter wheat, spring wheat, and durum be separated. The most important thing, if you're not one of our customers especially, is look on your stuff you're just getting from your agent and make sure it says ET, not EU on there on those crops. So if it says EU next to your winter wheat, spring wheat, and durum, that means it's going to throw all that stuff together, and there's no reason to do that. You should always have ET on there. The only reason there wouldn't be enterprise units by type on there would be if you want to keep your irrigated practice separate from the dry land. That would be EI, it would say. So if there's a scenario where it makes more sense to keep the irrigated separate from the dry land and have the types possibly combined, that would be the EI election that you would make on there. Okay, sorry, I've had a little technical issue here. Okay, so here's an example of how not to do enterprise units by type. And so we seed one section of winter wheat of 100 acres in the fall and another section of winter wheat to 40 acres in the fall. So the winter wheat then is in 2 sections of more than 20 acres, so it qualifies for its own enterprise unit by type. But then we get into the spring and we're like, oh, I'm just going to go do one more field of spring wheat. So we go seed 200 acres of spring wheat and don't have that so that it's all in 2 different sections with 20 or more acres. If we do this, by default, it will throw the spring wheat back with the winter wheat, and then those will be combined for a claim. We can also elect at that point, if we catch it before the acreage reporting date, to separate the spring wheat off and pay the optional unit premium, which is something we don't really want to do either, right? Is pay more premium. So to do this correctly, really what should have happened there is we've got our 2 sections of winter wheat here. We got 200 acres of spring wheat in section 3. We should have gone somewhere else and seeded another section of spring wheat to make this all work correctly. It doesn't have to be 300 acres in section 4 like my example here. It could have been 20, right? But we just need another section of that type then matched up so that we can keep the types separate for you for claims time. This is just an example of why you want to do this. At the 75% level, you can see in optional units, you're at $10 an acre for this $126 wheat guarantee. So the price is lower, so the premium's down a little. But if we get that extra 20 acres seeded, our premium goes down to $373, or basically a third of what it was in optional units. I'm a huge fan of enterprise units and planning your farm out so that the crops are seeded in groups around your farm instead of spread out all over the place, which we'll get into in another slide here. But just with a little bit of planning, not only can we make a big difference in your crop insurance premium, planning your crops out so that, let's say, all your wheat is in one part of the farm and it's not stretched out over 20 miles can make a huge difference in efficiency from seeding and harvest and other things too on the farm aspect, right? So how to plan your seeding for the least amount of risk. This is our farm. You can see all the flax was on the north part of the farm, the barley's on the south, and then the peas, they were down here by themselves, and we did have to find another 20 acres up here of peas to throw together to get the optional unit discount. But it's not very many acres, so we weren't really worried about that. But if we can keep each type of crop grouped together in each area of your farm, that really helps limit the risk of not having this in optional units. And it helps a lot with the farming, right? If you're going to seed flax, go all just to one area of the farm and just get the flax seeding done instead of bouncing around. So that's what we work with on customers, is trying to kind of get that reworked so that these enterprise unit structure works better for them. Because if you were an optional unit guy before, there's going to be years where one field probably is going to have a loss or something, and the rest of the farm won't, and you'd be like, oh man, I really missed out because I wasn't in optional units. Over time, you save so much money in enterprise units that I honestly do not see a good argument for optional units anymore. I would rather take the discount I got on the enterprise unit thing and apply that to hail insurance if I have a good crop. If you're in a drought, all of this stuff probably is going to fall under your guarantee anyways, and the optional versus enterprise unit thing doesn't matter in that scenario, right? On the malt barley end of things, so there's two different ways to go about this malt barley endorsement stuff. I love to use the malt endorsement, but there's some quirks with it. They did change this in 21 and beyond so that if your barley goes feed, they're going to use what you sold the feed barley for to determine that feed price. Where in the past it used the corn futures market. That could be more or less than what you actually sold the barley for, but it didn't really reflect accurately what happened to you on the claims end. So that was a positive change. They changed it so it's determined off the local. So here's just a simplified example of how the malt endorsement works. We're going to say we had a malt barley contract that was $5 a bushel that we applied to our insurance. All of our barley didn't make malt, so we got $3 for the feed barley that was rejected, and we should have got $5 if it had it made malt. So we got 60% of the price of what we should have received if it was malt, basically. We harvest 10,000 bushels of barley. The 10,000 bushels then is reduced to 60% of that, or 6,000 bushels for the claim, and that's how you end up getting paid more on a claim for your barley when it's rejected, right? So the less bushels that the adjuster counts against you on your claim, the more your loss payment's going to be. Here's an example of why you'd want to be in the malt endorsement and in revenue protection with the malt endorsement versus YP with the contract pricing thing. So a lot of agencies put people into yield protection with contract pricing, but it can make like huge differences, not only because you don't get to use the futures market move anymore, but also because you don't get the bushel reduction if you're in the YP with contract pricing stuff. So here's an example. This is off of our farm from 2 years ago here. We had 35,000 bushels of barley harvested. 11,500 went malt and 23,000 had to go to feed. Basically, it was rejected. So we sold the feed barley for $4.55 a bushel. Malt contract, the average price at that time 2 years ago was $7.62 a bushel for us on the insurance. And then because we're in revenue protection, we also get to use the drop in the wheat futures as part of our claim figuring here, right? So on the revenue protection side, our $7.62 contract got reduced down to by $1.62 a bushel because the wheat futures dropped $1.62. So they're only going to count $6 a bushel against us for the claim because we're in revenue protection. The feed sales price versus the malt harvest price then was $4.55 a bushel for what we sold for feed. We had a $6 harvest price on the malt side, so they're only going to count 75% of those bushels that got rejected as well here. 23,000 bushels of feed barley reduced to 75% of that means they're only going to count 17,475 bushels for this claim instead of the full 23,300 that they would had we not been in the malt endorsement. So then this is just showing you the back page of our schedule. We're guaranteed $344,000 for our barley on this 1,800 acres of barley. So here's how this plays out in a claim scenario. So this is going to compare, had we been in YP with contract pricing versus RP with the malt endorsement, what a difference this would have made, right? So 11,500 bushels went malt, but for us, we get to value that at $6 a bushel because the futures market dropped. If we were in yield protection, which we would be the yield protection contract pricing thing, we're stuck with the $7.62 a bushel for the value for our claim. So the difference between those two programs and how they value that grain would be a $18,630 difference. That is how much more we would get paid just for being in revenue protection, aside from the malt issue, right? The 23,000 bushels that went feed then, all 23,000 bushels are counted against you in yield protection because we don't get the bushel reduction. Plus we have to count those at $7.62 a bushel, so $175,260 for the claim value there. In the malt endorsement end, we get to reduce that 23,000 bushels down to 17,425. Plus, we only have to value those bushels at $6 because of that futures drop. This is what happened in this crop here. So 104,550 value for the claim if you're in revenue protection. So $70,710 difference in the amount of claim payment just for the malt endorsement portion of that now. So when we put those two things together, our yield protection claim would have been $81,000. Our revenue protection claim with the malt endorsement would have been $170,450. That is an $89,000 difference in the claim for $2,700 in premium if we're in enterprise units on 1,800 acres. So that is just one example, a real world example of how this plays out sometimes if we get big moves in the futures market and we actually hit where we have issues with quality on malt at the same time. So it can make a huge difference. Plus, being in revenue protection makes a huge difference on whether SCO or ECO trigger too. So in this crop year, I think that market had dropped 25%. That means that the county could have cut an average crop and we still would have considered the county's revenue to only be 75% of average for those county-based programs in RP. If you were in YP in that scenario, you would have had the county being at an average crop. You wouldn't have got your SCO or ECO money, where in revenue protection you would. So lots of reasons to be in revenue protection instead of yield protection and using the malt endorsement instead of contract pricing. Now there are some downsides. One downside is you have to dispose of all of the barley so that they can see how much went malt and how much actually ended up going feed in the end before they'll settle the claim. So it can drag your claim out quite a ways. The other thing is keeping things like keeping seed for the next year. It's kind of a gray area in this. And sometimes if you want to do that, you have to drag that all the way out till June till they'll settle the claim. So there's a couple strange scenarios there where the malt endorsement thing can be more difficult. But you can see the difference in the payouts can be gigantic. And if I was to stack our SCO and ECO payments that probably were triggered by being in revenue protection on this, it could easily be $200,000 total difference between these two programs on that many acres. So quality loss endorsement, this is something we added on everybody's barley. It's available in wheat and barley. We added on everybody's barley on our stuff this year because when we do these malt reductions like we had in the previous slide, what gets used for your production then for that crop year is the reduced production for the claim when you reduce it for the malt part. When we use quality loss, we can then pay a little money and they'll go back and use the actual total bushels, not the reduced bushels, for your APH, which is a pretty big deal if we get multiple years of this malt stuff added up. And if you're in enterprise units, again, these endorsements don't cost much. The scenario we had run at our office here, it reset the yield back on a couple of years for a guy, and it costs 50 cents an acre, I think, to do that on that unit. This only charges you something if it's used too. So if we put QL on your barley and it's never a thing where you have reduced bushels in a claim scenario because of quality issues, then it won't cost you anything in the first place. So it's good to have that on there, I think, for the barley, and especially in enterprise units. If you're going to add new crops to your policy, let's say you had never had flax on your policy and now you put it on there this spring, but you've grown flax in the past, you need to go back and rebuild that history the best you can backwards at that point, because if we don't do that, the system's going to flag you as having experience of growing flax in the past with no history in the system to match it up with, and the government then requires you to start with 65% of the county average the first year you grow that crop, instead of getting 100% of the county average if we proved up all of your production. So long story short, that's why we make you go back and rebuild production backwards, even if you hadn't insured the crop in the past, because they won't allow you to qualify as a new producer if we don't do that. Triticale growing for grain. This was new in 2022 in these counties. So we can do it in Toole, Liberty, Pend Oreille, and Choteau, and Cascade. Those would be the ones kind of around us. And then Broadwater down here too. You can't do that in Glacier and Hill yet, and we can't even do a written agreement in those counties. So if you're going to grow some triticale for grain, I think you might be able to get a NAP. You'll have to look into that. But if you're in Toole or Liberty or Pend Oreille around us here, you can insure that now right up front. That should have been added on your policy last fall. We always put all the insurable crops in the county, so it should be on all your guys' stuff. But this changed quite a bit from the first couple of years it came out. We had really high county average yield. So you can see area 3 in Toole county's recrop triticale yield was 43 back in 23. Then the government kind of realized, whoops, we kind of screwed up in these yields. I guess we need to reset these. So in the 24 crop year, that dropped to 26. So if you've never done triticale for grain, there was a couple of years there where it was really good as far as the yields they gave you. In 24, that rolled all those yields back to more like normal recrop wheat yields. The good thing about this crop is we can use a contract to increase your price even on conventional, which is the only crop on conventional that we can really do that with as far as a wheat type. There is no revenue protection in there, so that part's not a real positive. There's no SCO available for it. And it can be a winter or a spring type, basically. So if it's something you're going to do anyways, if you're going to grow this for seed, like for a seed plant, and they're going to give you a contract to do it, why not use this? You can use that contract on your insurance and get yourself a decent guarantee. If you don't have a contract, this isn't a very high guarantee thing to be doing. So as far as a rotation crop, maybe not real desirable. If you're going to do triticale or barley as forage, so you're going to grow that stuff and hay it, and you mark FG on your map, that would be a NAP concerned thing. So that'd be for this deadline too. You'd want to talk to the FSA and get a NAP policy on that stuff. Flax was new in 2020. In 2020, that got added all along the high line, basically in every county, as you can see. Now as enterprise units in 24, that was a positive change, and now in 25, they added revenue protection to flax. No rotation restrictions on that crop. The earliest planting is April 11th, and the late planting isn't until June 10th. So that's a real good crop. Let's say your winter wheat failed and you need a second crop to throw in there and you actually want to insure it for some reason. That we can seed really late and still not get penalized on the insurance. The conventional price this year is $12.48 a bushel. The organic price is $29.58. And SCO though on this crop or most of these specialty crops is based off the whole state's yields instead of just your county. So the reason that is there's not enough acres in Toole County to establish a really good pool of yields for SCO like for that crop. So on some of these specialty crops, just remember if you're an SCO and possibly an ECO, the yields may be based off of the whole state and not off of just your geographic area. Doesn't mean that they won't pay consistently because we've got quite a few payments on flax on SCO, but it does mean that your county might be really dry and the rest of the state really wet, and some of these may not trigger the way you expect for that given crop year anyways. Now hemp insurance, you have to have 1 year of experience growing it. If it ends up being over 0.3 THC on THC content, it's not an insurable cause of loss, so there's that risk in this too. If you get to harvest and it's dry and it pushes up the THC in these plants, that's not a payable cause of loss in here. So there's some quirks in this program, but if you want to do it, give us a call and we'd be glad to go through the specifics with you. Camelina, that's February 1st sales closing, so that date has passed if you don't have that in your insurance to get it added. You must have a contract to insure this. That's just like mustard's the same way. The max contract price we can use is 26 cents for this crop for this year. Pretty low yield. So area 2 in Toole County, which is the bulk of our county, would be 475 pounds summer follow yield, 400 pound CC. The better area of the county 725 versus 554. They did increase the max coverage levels this year for Camelina from 65% up to 85%. So now we can do like we do with the rest of our crops and at least bump ourselves up to 75% on this crop. They also added enterprise units in 25. So positive changes being made to this. The issue with this crop is the guarantee, even with the max contract price, is really low. So at the 70% level, as you can see on this quote sheet here, your guarantee would only be $86 an acre with a 26-cent contract. So a lot of guys, of all of our customer base, we asked everybody if you're seeding Camelina this year, and nobody has responded yes to that. On the positive side, they are changing the insurance for the better where you can do enterprise units. So as you can see here, we could be at the 75% level now and only pay $488 an acre, where before at the 65% level, which is the highest we could go in optional units, it was $737. So we can be up multiple levels and still be half the price because they added enterprise units into this program. So that's a positive. Mustard, yellow and brown types are insurable. The other thing with mustard is for some reason it's not insurable in Glacier County yet. It is the rest of the way along the High Line by default. So if you're in Glacier County and want to do mustard, we need to do a written agreement for that. The other thing is it's only yellow and brown types that are insurable without a written agreement. Even in like Toole County, even though mustard's insurable here, if we want to do Oriental mustard, we need to have a written agreement done by March 15th for that type. So if you're doing mustard contracts and it's not standard yellow or brown types, make sure you get a hold of your agent, because that might be something that needs to have a written agreement done by March 15th. Same rotation restrictions as canola and enterprise units were added in 24. That made that crop substantially more affordable to insure if you can fulfill the enterprise unit thing. The other thing is we need to have a contract. You have to have a contract to insure mustard. So if you don't have a contract, we can't insure it. So make sure you get that done ahead of time. Insuring canola, that can be done without a contract. Actually, contracts don't do you any good on that. So April 15th is the earliest planting date. Now they change it to May 25th for the late plant date. So now we used to only get 30 days to get that seeded in that window. Now we get some extra time. So that was a positive. This just shows you the guarantees for the different map areas in Toole County. I would say map area 3 is probably similar to what like a Pend Oreille County or Hill County would be, but dollar-wise anyways, without SEO or ECO, in our area 2, our poorer area of the county, the guarantee is only $128 an acre. In the best area, it's $181 this year. The price, like I said, is 20 cents. Those yields got knocked back quite a bit on this. The county average yield for area 2 last year was 1,050 pounds, I believe. Now it's down to 825. So these drought years are taking their tolls on these county average yields, and we just need to get some decent rain in here to start building these yields back up. Dry pea disclaimer, you're also going to have to sign this as part of your packet that you got from us. That states that you understand some pea types may not have harvest prices. Even though you signed up for revenue protection, there may not be enough volume of something like an Austrian pea to establish a harvest price on that crop. So they're having you sign this saying, hey, you know what? I understand it's possible that Austrian peas and Desi peas, those are the two really that have issues, may not have enough volume traded to establish a harvest price, even though I kind of paid for that to happen. That's never an issue on lentil, smooth peas, or chickpeas that I've ever seen. Those crops have plenty of product traded at harvest time to establish a price. So that's why we're having you sign that. You have to sign that disclaimer to actually insure peas. So that's part of your packet. I'm sure that your agent will have you sign this year. That's just the explanation. Pea and lentil quality adjustment. So this is one of the biggest things as far as adding to your claim on peas that is screwed up sometimes, that even adjusters don't understand. So peas and lentils that are number 2 or less are docked in production for your claim by taking the price you should have received for number 1s and dividing that into what you got for number 2s, basically. So number 1 lentils in this example are worth 25 cents at the elevator. Your number 3s, they're paying you 15 cents for. You harvest 10,000 bushels of lentils. So the crop insurance will adjust your production down for your claim by dividing the number 3 price into the number 1 price. So in this scenario, the 15 cents we got at the elevator for number 3s versus the 25 cents we should have had for them being number 1s is 60% of the value that we should have received for number 1s. Your 10,000 bushels of pulses that you cut in this scenario is going to get reduced to 6,000 bushels for your claim, and that's how they pay you more for that. We had an insured last year that understood this rule because of our meetings. His adjuster didn't understand it and told him that he didn't think he could use the quality loss stuff for his claim. So the claim got paid anyways, and then the insured came in and asked about it. We got it corrected, and when that got corrected, it added something like $100,000 to his claim. So this can be a really big deal if you have something that goes, let's say, sample grade. Another reason to do bin samples. So always do bin samples on everything at harvest, even if you're a ways above your guarantee. They're a good thing to have anyways for marketing your grain. For $30 a bin, even on wheat, if we catch some issues in your wheat that had not been caught by bin samples, it might make a difference of $10,000 in payment on that bin. So everything must be sampled within 60 days of harvest. So as soon as you're done harvesting, if you have an open claim, have adjusters come out and pull all those samples. If you don't have an open claim, then at least pull all the samples yourself and send them to the state grain lab. We are going to work with the state grain lab to get a bunch of sample bags here, and then we'd kind of function as a drop-off point for you guys. So if we're in a year where you're not, you're out of a claim, you think you might have some quality issues and you want to send samples in, we're going to try and have those supplies here at our office for you so you can pick that up. We'd really like to do whatever we can to get you guys to do grain samples, because it can make huge differences not only on peas but barley and wheat and pretty much every crop that you do. It's good to understand if you have falling numbers issues or if they're sprouting the barley or anything like that. So chickpea specific rules. First thing, only Ascochyta resistant varieties are insurable. I'm not really aware of any varieties that are floating around out there that don't fall into this category. So I think we're okay there. Big one though is the seed must be treated with a recommended fungicide to prevent Ascochyta blight and seed-borne diseases. So the seed treat you're using has to be labeled for Ascochyta, so that if it doesn't mean that you have to treat the chickpeas. If drought or hail is the cause of loss, then it's still a payable loss. But if Ascochyta causes the loss and we didn't treat it with something that controls Ascochyta, then it was not an insurable cause of loss on the chickpeas. So be aware of that. You don't have to test your seed anymore. In the past, you had to send seed samples off to make sure that they didn't have Ascochyta present on the seed. They removed that requirement. And then if Ascochyta blight damage has occurred in the field, the insured must provide proof that chemicals were used to control the Ascochyta blight in order to avoid an uninsurable cause of loss. So in other words, if that's a cause of loss, we need proof with seed receipts, chemical receipts or whatever to prove that you treated that stuff, and then also that you tried to control it in the field if that came up as an issue. So one thing you don't have to do though, so this was misinformation from a couple of years ago, is you don't have to treat your peas or lentils. That this is a clarification over this this insurance company in Washington had come out with a slide saying that you have to treat peas or lentils for those to be insured. That is not correct. So peas and lentils, you can actually put whatever you want on there for seed treat, and it will carry through. If Ascochyta is the cause of loss, let's say on there, we don't have to prove that you treated the seed with anything to prevent that. So cover crop guidelines. Big thing on this is if you're going to seed winter wheat into a field that has been cover crop, that same crop year, you need to have terminated the cover crop 35 days prior to planting the fall crop. To qualify for summer fallow for the next crop year, it has to be terminated by June 1st. And it cannot be hayed or grazed. So basically, if you're going to seed cover crop, it's going to end up being recropped the next year. And then the other thing that's really important to watch on this is the rotation restrictions apply to plants in the cover crop as well. So don't seed yellow peas in there and then go seed peas the next year into this cover crop, because you would have not been in compliance with the 2-year break between the last time it had yellow peas in it, for example. So make sure you keep track of the species in your cover crop, because it could affect your eligibility for insurance on your monocrop stuff going forward. SEO and ECO, these are two huge programs in our area as far as buffering these bad years, right? We've actually had this program pay out along the Highline something like 9 out of the last 10 years. ECO's only been available, I think, for 4 years, and it's paid out basically every year that it's been available. So the big change this year for this is on ECO, they upped your premium subsidy from 44% up to 65%. So big kudos to the grain growers. They were a big part of pushing for this. We now have the same subsidy rate for that ECO, the 95% coverage level, as we had for the SEO, which is at the 86% on down to your individual level. So big difference. It basically dropped your ECO premium by $2 to $4 an acre, I would think, something like that. So SEOs, just to review these, because I know some of you guys maybe aren't participating yet on this, but SEO is a county-triggered disaster program that you can elect and pay for through the crop insurance side of things. So instead of having to wait for something like ERP to come out multiple years down the line through the FSA, this program pays the next spring for the previous crop year. It's triggered by the county's yield/price. So it could be that the county cuts an average crop, but the price of wheat dropped 20%, and that can cause these programs to trigger too, which has been very common here the last several years. So it fills the gap between whatever your individual level is. So for most of our guys, that'd be 75% up to the 86% level. It's paid a lot of money out during the drought years and price declines the last 10 years now, and it insures your farm up to the 86% level. For not a lot of extra money. So it's like $3 an acre for $25 worth of gapped coverage in there, right? Can trigger without your farm triggering a loss or vice versa. So that's the most important thing to understand, is this is a county paid disaster program. It's not based on your individual farm, but so far since this program came out, it seems way more functional than any other government disaster program that's been available, and makes more sense because you guys are paying into it as well. So it's not just ad hoc getting paid out from taxpayer dollars. So The odds of payout are way higher with inflated prices because of the ability to be triggered by revenue declines. But still, even in drought years, we've had years where we hit bad enough droughts, like in 21, I believe, where our yields were low enough to trigger it. So the yield got down to 75% of the county's average yield, and then the price doubled. And when that happens, you get double what your guarantee that you paid on was on this stuff too. So it can work both ways. When the price is down like now, your premium's a lot less because the guarantee is less. It's slightly less likely to pay because we've got less room to drop, right? But if we do hit a drought, we sometimes get a really big bang for our buck if the market comes back up and the yield is down in the county. ECO triggers from once we get below 95% for the county, and you get all the money for that program once it gets to 86%, or when the SCO kicks in. So that ECO is stacked on top of SCO to fill the gap up to 95%. The premium now is only about 25% of your guarantee. Before they changed the subsidy, it was 33%. So basically it has to pay just 1 out of every 4 years to get your money back out of this program. Statistically, it should pay every other year when it just needs to be below 95% or just below average to start to trigger. So really high odds that you're going to get your money back out of both of these programs because of the subsidy level, basically. So on your break even, so SCO needs to pay 1 out of every 6 to 7 years, depending on what crop it is. ECO 1 out of every 4 years. So 50-50 chance of ECO paying every year. Most of our customers are in both of these programs now because we have had so many years of drought and we can't seem to break that cycle that even with depressed prices, I think the odds of these paying going forward are pretty high. And if it doesn't pay, that's a good thing, right? It means the county as a whole did better than average. So here's how this stuff stacks. So you can have PLC. So you need to be in PLC to be in SCO. I should have mentioned that back on the previous slides, but if you elect ARC at the FSA, you can't be in PLC for that crop, for that farm number. So first thing is you need to be in PLC. The good thing about that is this stuff can stack on top of itself. So we've got our individual insurance, of course, the 75% level, and that'll pay on whatever happens on our farm. Then the SCO triggers if the county does poor enough, which is usually a drought that triggers that, or price declines, right? So that SCO can stack on top of that. That ECO can stack on top of that, so that gets us up to 95% of our average that we get paid on in a bad year. And then PLC then can stack on top of that, and we are close, like you saw in the previous slide, to getting PLC to trigger too. I would not be surprised if it triggered maybe a 10 to 20 cent per bushel payment again on PLC, kind of like it did back in the, I think, 16, 17 type time frame back there. So that's a good thing. These things can stack. And when we had really bad years back, I believe that was in like 2016 through 18 or something in there. When we had those really depressed wheat prices, we had that exact thing happening, except we didn't have ECO at the time. So we had SCO triggering and PLC paying, where if you're in ARC, all you can get is the ARC payment, right? So how's this paid out through our agency? This chart just shows you, this is just through 22. There was $13 million of paid in or $13,600,000 of paid out losses. You can't see this because my head's in the way, but basically for $2.5 million of paid in premium. So it paid back about 7 times what was paid into it. So pretty big deal. Huge differences for guys that were in these programs versus the ones that weren't, as far as having to roll operating and things like that. The first year ECO came out, and this just shows the SCO and ECO premium and then what it paid out. So as a whole, through our agency, on average, people paid $12.30 into this program an acre, and it paid out $48 between the two of them, basically. So big returns on what was paid in. I know the guarantee seems low when you look at $48 for $12. That seems like a lot of money for $48 of guarantee. But the odds of it paying are so much higher than your underlying insurance that's why it's more expensive, and it should pay you a return statistically going forward in the future. It's just a different animal, right? We need just such a shallow trigger to trigger all of your money, where on your individual coverage on your farm, it's really hard to get down even to half of what your average is to get a decent amount of that guarantee. So So hopefully that makes sense as to why that costs more money than what your underlying coverage does. One thing that's going to kind of put the skids on this program if we don't get a handle on it at some point is that the yields in these counties that have had multi-year droughts are starting to decline. So in Toole County, we started at 39 bushels an acre on wheat. That probably was pretty high for the amount of recropping that was happening in the county anyways, but that has now got whittled down to about 29 bushels. So we've lost about 10 bushels an acre on the wheat average. I still think we're in a spot where it's worth being in that program for like Toole County, because for example, last year, our average yield for wheat in Toole County ended up being, I think, 22 bushels an acre, and that was with quite a bit of rain in the spring. So when we hit the skids here, when we hit some bad drought years, we certainly can ramp down those yields on wheat low enough to pay. Last year, we could have cut, I think, pretty close to 30 bushels of wheat just because the market declined so much and still have triggered both those programs. So still worth being in, but we're going to have to watch this as we roll forward. If we get down into the mid-20s or less, then we're going to have to consider whether this program is going to function the way that it should for us going forward. So long story short, we really need some years when it rains and we build yields back up and this doesn't pay, right? Look at Pend Oreille County where it hadn't paid, although it has paid the last 3 years in there. They haven't adjusted the yields since then, and they're at 49 bushels an acre. Now, that's a pretty winter wheat heavy county, a lot of fallow there, but either way, if you're in a county where the yields have been building, it's a no-brainer to be in these programs. If you're in a county where these yields are dropping, I don't think they've dropped enough to bail out yet, but we can only go on so long that way, right? The same thing's happening to your guys' individual insurance too, because you're all experiencing the same droughts. Our guarantees are getting low enough that it's getting harder to cash flow this stuff through the bank if we have a crop insurance loss. So on the flip side of that, everything that goes down usually comes up, or always has for the last 200 years, right? So this drought cycle will break eventually, and we'll start pulling yields back in, and those yields will start to build back up. That's just how it at least has always worked. So on the bright side, I think we are nearing the end of this 10-year drought cycle. Let's hope, and that better days are coming, right? So what our data shows for 24. So this is we can take all of the production you guys report to us, put it into one big spreadsheet, and then come up with averages for these crops for the county. So this is how I can kind of guess whether SCO and ECO are going to pay for you guys by county. Now, we've got a lot more data for Toole County than we do the rest of these. So Toole, I'm very confident in. The other ones, I think we have enough of a sample to be pretty confident, but not as much as Toole. But either way, when you look here at this chart, in Toole County, it looks like we're going to average about 21 bushels an acre on average for wheat for Toole County. The other thing that happened is the base price started at $6.48 and it went down to $5.79. So we had like a 25% drop in the wheat price as well. So that gets our average for the county when you figure the price drop and the yield drop down to 52% of average. Remember, we only have to get below 75% of average to get all of our SCO and ECO money. So moral of this story is we have all of the good barley producers, most of them we insure up here along with the hills. So the barley yield is weighted actually probably on the high side through our agency. You can see barley only is coming in at 27 bushels an acre. The SCO yields 41.8. And then there was a revenue drop too, so only 54% of average for the barley. So it looks like you'll get all your ECO and SCO money in Toole County for barley. And then in Glacier, we have some of the better areas in Glacier for customers probably up north, and still those show this triggering ECO and SCO. So everything on this chart, including Hill County, shows these triggering for you guys. So I think there's a really good chance most of you are going to get all of your ECO money for sure. Toole County ECO and SCO and everything, except possibly the pulses. It's harder to, we're right on the edge of that, but big payments coming for all you guys all along the High Line again, I think, on that program because of the heat in July, right? For you guys that are customers of ours, you'll have a full farm quote that looks like this. We only quoted the 75% level for you. The reason for that is you can see when you go from 75% up to 80%, you get about a $7 premium jump on your underlying coverage. From 75% down to 70, it only jumps about $3, and then your ECO and SCO, your SCO gets more expensive as you go down a level. So it's no more expensive to be at 75% than at 70 if you're going to be an SEO as well, because as you go down levels, the SEO is covering more of a gap, and then the premium goes up on that. So the sweet spot is 75% is the moral of this slide. That's why we have all you guys at that. If you get above that, you start losing subsidy on things, and it gets really expensive. So most guys are at 75% with SEO and ECO stacked on top of that. If you're only going to do one of those county programs, I would do ECO because it's the most likely to trigger, and with the increased subsidy, not as expensive as it used to be. Because things are so tough right now, you can look here. We're looking at wheat with the 33 bushel average, and this is so adding SEO on top of that, so a $217 guarantee. The SEO would add $31. This is an old quote. This is a higher price than wheat is right now, but the moral of this is see how they stack. So you would take your underlying coverage of $217 plus 31 plus 26. So that extra $50 or $60 an acre that ECO and SEO is adding in there is definitely the difference between making money and not for most farms. So if we have a bad year, those pay out. If you have a good year, you're only paying another $10 in premium, let's say, or whatever, with the increased subsidy, and it probably isn't going to make that much of a difference for you guys financially. So these things are gifts to you guys from the government. They're subsidized high enough that they should pay a return all the time, and I would try and participate in as much as you're comfortable with anyways, premium wise. This slide just shows that why we like to use enterprise units and then stack these other things on top. So if you had optional units with SEO, this is an older quote, but you can see it's $23 an acre to be in optional units with SEO here for this crop for $190 a guarantee. If we switch to enterprise units, we can do SEO and ECO, so that gets us up to $210 a guarantee for only $18.47 an acre. So $5 an acre cheaper, and then you pick up more coverage when you do this stuff stacked in enterprise units. Now, if you were used to the optional unit structure thing and getting paid on one area when you get hailed out, let's say, or whatever, that's where planning your crops so that they're grouped together on the farm is a pretty big deal if you're going to switch from that to the enterprise unit thing. Most of the time, I will say, when things really go south, it really doesn't matter that much if you're enterprise units or optional units, because if it's a bad drought, the whole farm falls into where there's a loss anyway. So keeping the units separate doesn't really matter. The other thing we can do is if we have a good year, we have decent looking crops there, we can stack hail insurance on top of this stuff in the enterprise unit thing and take that savings and put it into hail. So that $5 an acre that we saved, that would probably buy you pretty close to $100 an acre of wheat hail insurance that we could stack on top of all of this. So if one area got hailed out, at least that pays separate from everything else, and that buffers the risk of being in enterprise units too. If it's dry, hail insurance really doesn't make sense because every time it hails, this is just paying you more. So unless you're using it just to speculate that it's going to hail and try and make money off the insurance, oftentimes when it's really dry, our hail insurance sales ratchet way down because guys understand, hey, I'm already below my crop insurance guarantee. It's just going to pay me more every time it hails, right, on the farm. So like I said, you have a full farm quote in front of you. If you're one of our customers, those are average roll-ups of all of your units together for, let's say, summer, fall of wheat. If you would like us to print a more detailed report where it's down to every unit having a separate line for your quote so you can get a better handle on how good your guarantees are on different parts of the farm, let us know, and we're glad to crank those quotes out. We do the average roll-ups just to give you kind of a 10,000-foot view of what's going on with your farm, and then anybody that really wants to get into the weeds on this stuff, we were more than happy to print you a more detailed report. So what are the odds all this stuff pays in 25? So you can see, here's a chart of the wheat market. You can see we had kind of hit some peaks in here, right? We actually had a decent run up during the start of the Ukraine war. We actually got up above $10 again, and how long did that last, right? So we are now back down to about $5.50 a bushel on average, let's say, on the futures for the wheat. So the one thing that we don't have going in our favor is the odds of it going much lower than it is. So when the market moves down, that gives us even higher chance of getting paid even if we cut decent yields. What happens when we're at a bottom like this is the premium is way less than it was when it was at $12. So we're paying half the premium, And what, like we discussed before, what could happen is we could hit a drought, have the market run up then, and get paid more than what our guarantee is. But as far as statistically, starting from a higher point gives us better odds of this triggering. So not as good that way. We are still in abnormally dry conditions for Tooele County and pretty much the whole high line up here. So that part, as far as the drought goes, we haven't really broke that cycle. We're better than we were. So what's it say going forward? And they've been pretty accurate on this stuff. This is what happened last year. As you can see in 24, they predicted below average precip and above average temperatures, and that's exactly what happened as we got into the May, June, and July timeframe, which is what this chart shows. Now, granted, we had one giant rain in May, which certainly helped, but we're having trouble when we get to July and these weather cycles getting rain and with the temperatures being warmer. So what we're looking at here now is we are below normal, but not in the worst below normal. So a little bit of improvement on the precipitation end, but still below average is what they're guessing. And the temperature being higher in the summer, above average, we are definitely in that zone where it looks like it could be hot again. They're getting better at this weather modeling. This isn't perfect, but I'm kind of big into odds, right? So maybe there's a 70% chance this happens and a 30% chance not. That still means this is weighed in our favor of things triggering losses just from a reduced yield standpoint. So LRP insurance, this is going to get covered in a separate presentation that I'm sending you guys that are watching things online here. So I just wanted to let you know you'll be getting a separate link that'll cover this. This is probably the most important time to consider pricing livestock that you're going to have in your lifetime, and we are at record livestock prices. So if you get a separate link from me and you want to cover this, I'm not going to spend a bunch of time on it here in the farm, the crop side of this stuff, but just know I don't think there is probably a more important time to put a bottom on the livestock market than where we're at currently. So look for that other link. I'll cover that in that presentation. So most important slide of the day, these are just things to review that get screwed up for this deadline. So must use your full legal signatures on all documents. If we send you some DocuSign stuff that you usually can just type out the signature, you don't have to draw your signature on that. It's kind of different rules on that stuff. But if you're signing in the office, we need to sign it exactly as the FSA would have you sign it there. Don't wait to turn in a claim if you think you have one. This is just a reminder for this coming crop year. If you get to August and we're harvesting and you're like, man, I think I'm going to be right on the edge of a claim, or even I'm within a bushel or two here, turn a claim in. It's always better to turn it in and sign off on it later. There's no rules against turning in claims every year. It doesn't affect your insurance rates or anything. But if we don't turn it in within 15 days of the end of the insurance period for those crops, then we have issues as far as late reporting claims. And they're getting stickier and stickier on these things. So there will come a time where you're going to miss this time frame and not be able to get paid. I think that's we're already getting a lot closer to that. So don't let the adjusters throw all your production together if you have records to separate it out. If you took the time to keep truckload records at harvest and then they come to you and say, hey, I see you're in enterprise units, let's just go ahead and throw this all together and average wheat over all the units on your farm. Don't let them do that, because once they do that, tosses all those units together into one big unit, and we can't split you back out into optional units for a year there if we need to. Plus, it doesn't keep your yields in the right spots in the farm for where crops do better versus worse. So, for example, you might have one area of your farm you tried mustard on twice, but it was too far south and mustard's just not going to work down there. If we keep things separate, we are able to isolate that bad mustard experience you had on the south end of the farm. If we throw all your units together, then that no matter where you seed mustard on the farm, that yield's going to follow you around. So I really like to have guys keep stuff as separate as they can still, even though you're probably never going to switch back out of enterprise units. You never know. If they increase the subsidy on optional units, then maybe it'd make more sense to be in optional units. But we just want to keep that option open, and that's why we have you keep stuff separate. So don't let the adjuster throw it together. Strongly consider ECO and SEO with the current market and drought conditions. Certainly those programs have paid a lot in the past. You guys that have already been in it for this long are so far ahead that even if you paid the premium for the rest of your farming career, you probably would never catch up to even where you were breaking even on that. So those are great programs to buffer problems when we hit droughts. Banks love them because it ups your guarantee. I would strongly suggest looking at being in at least one of those county programs, if not both. And like I said, if it's going to be just one of them, be an ECO because it's the more likely to trigger, right? Never take YP versus RP in a crop unless there's a very solid decision. If you're watching this and you're with a different agency, if you see YP on anything, question why that is with your agent, because there's usually never a good reason for that. The only reason that should ever be on barley usually would be if you're doing waxy barley, which there's not really any of that left around here, at least that I know of. So enterprise units by type makes putting wheat into enterprise units much more appealing. So make sure it says ET, not EU on your apps, whether you're with us or with another agency. There's no reason wheat should ever have EU on it, really, ever. There really would be no reason for that. It should either be enterprise units by type or enterprise unit by irrigated practice, or maybe enterprise units by county, but never EU. If you have the option, you're always going to want to pick something else. We can't do that on barley yet, like we talked earlier. And then peas, the pulse crops we need to make sure are by type as well. So always elect PLC at the FSA. This is likely it'll pay for 24. Honestly, ARC is very likely to pay for 24 as well because of the drought and the price decline. But the guys that were in ARC weren't in SCO, and the SCO would pay at least, I bet, double what their ARC payment would be. So you're better off being in PLC and SCO as a whole, I think. I'm very confident in that for the number of years we've done this. Submit samples at harvest, even if you're not on a loss. It's good practice anyways for your guys' marketing, but it can flag things that, hey, I didn't think my lentils were sample grade, but then they end up being, and if that's the case, you might have cut a good lentil crop and still get a payment from us just because of the lower price that you're going to get for that. So thank you so much for listening to all this. You're always welcome to reach out, call me, email me at the office or whatever, but I appreciate you guys taking the time. We'll be following up for those of you that are our customers with a check sheet that we're going to go through with you as well. And if you're not one of our customers, just please look through your app and make sure that all those elections are correct, because March 15th is the deadline for fixing that. Same thing with written agreements, right? So thanks you guys so much for taking the time to listen to this.